You feel like this trade is teetering a bit, or is it just taking a breather and, we're going to be right back putting money where we've been since the beginning of the year?
I would be happy if we had a little bit more of a balance rather than this lurching, everybody run to one side of the boat and then everybody run back to the other side of the boat, because the market ends up not going anywhere. And already, it looks like 4,100 might have turned us away, or at least we're stalling there, let's just say. So it's a much better market environment where you've got different groups, and it's not necessarily this very clear delineation between value and growth, but really it's more about companies that are doing well leading and companies that aren't doing as well lagging. And it would be nice to get back into a market environment that's less top-down thematically driven and more about people making judgments on fundamentals, even if that's not on a stock-by-stock basis, but a sector-by-sector, and have those moves last longer than 2 or 3 weeks at a time before the next rotation. So that's a wish list. I'm not saying we'll get that, but that would be the kind of thing you would be looking for if, in fact, you want to see us break out of this range. I would point out, though, a lot of people are using this catch-all term to describe the reason behind what we've seen this year. They've been saying positioning. And I mock it a little bit, but really, positioning is the answer. We know that hedge funds trading the E-minis bearishly are at a high we haven't seen. You have to go back to 2011. That's all positioning. So then all of a sudden you get this massive rally in large cap growth stocks, and it accelerates into the end of the quarter, and it's still largely with us, even though it's cooled down a bit over the last week. Where does that come from? It's a catch-up trade. And I don't know that that's the kind of thing that you want to bank on continuing at the same pace that it's been going for. So to answer your question in as succinct a way as I can, with that background, I would just say, let's wait and see if we get follow-through from the Russell 2000 names, from the value names, stabilization in the bank and financial sectors. If we get that, it does augur well for another leg up, but we don't have it yet, even if we have this outperformance from the FANG names continuing.
Bryn, it really is stunning in terms of the performance year to date. Apple's up 26% year to date. Microsoft, Alphabet, Amazon, each at least up 20%. And you want to go Meta and NVIDIA, you got to put an 8 handle on the number, 82 and 83 respectively. What do we make, though, of the way that this space has traded lately? Some would say, okay, if soft landing is back on the table, no wonder that cyclical or quote-unquote value stocks are going to outperform in the at least near term. But maybe it's just a moment in time and money's going to go right back to where people believe it can have better growth, where the balance sheets are better as well.
I think that for right now, the majority of the returns in tech, especially within the names you listed, add a Tesla to that. I think these first quarter returns are just incredible, and you could easily end the year around here with those returns, because these are full year returns we've received in one quarter. And then we have earnings upon us. And I think for the most part, like with an Apple, which I think we'll talk about later, their earnings and revenues are going to be down, year over year. And so I think this earnings scenario that we're coming into is going to decide within the mega cap tech, were these multiples justified? Does their narrative going forward with what Tim Cook says or Jensen Huang or Elon say about their companies justify the massive multiple expansion we've had? Because I do think that multiple expansion, that re-rating is a little bit too much too fast. I also think it's healthy, though, because 3 weeks ago, Scott, we were talking about within the banking crisis, whereas tech stocks were trading like we're in a soft landing, energy stocks were trading like a downright recession. And so I do think that catch up and that broadening out within healthcare, within energy, is a really positive to the market, because we don't want to see 5 names make up 90% of the return, which is what you saw in the first quarter. So I like the broadening theme. But to Josh's point, whether it lasts or not, is really anybody's guess.
I want to sort of play off what, Bryn and Josh were talking about, Jim, the idea of positioning or being, out of position, so to speak, off sides to this trade, as many have been, you guys included, in terms of, let's just take Apple, for example. You're underweight, Apple, you're underweight. Apple. Apple's target today goes to 188 at Credit Suisse. Apple's target goes to 180 at Canaccord. Steady iPhone sales, China reopening. You could create a number of different bullish, theses behind exactly what's happening there. But how do you answer that?
So to start with, I am of the opinion that Apple and this tech trade is a referendum on what the economy is going to do. And I think there is still a very vibrant feeling that we're headed for a recession, especially after the Fed minutes yesterday that said the Fed thinks there will be one at the end of the year. So that may say to me, well, why don't you get at least equal weight on Apple and the rest of the technology?
Yeah, why not?
Yeah, and the reason for that is actually really quite simple. I know of very few people who are looking for a deep, dark recession like something that came out of the great financial crisis. Even what the Fed itself, Scott, put forward yesterday is a short, shallow recession. And if they're right, and I'm still in the soft landing camp. I'm certainly aware that we could have a recession. But I'm in the soft landing camp, and regardless of whether we get a short, shallow recession or not, I think the market is soon going to look forward to 2024, and it's going to say, hey, inflation's under control. The Fed's done. Yes, there's been damage, but it hasn't been critical, lasting damage. Let's get back in the cyclicals. Let's get back into value. Let's get back into the small caps that Josh just mentioned. So, look, those are fabulous numbers for those tech stocks. I think they'll do okay from here, but I'm still putting my money on the value cyclical stock.